economic engine of the world. As global powers position themselves around strategic territories, resources and economic blocks, where does Africa stand? What would the U.S. acquisition of Greenland mean for African economies rich in minerals and energy? Economist Sanele Sibia will unpack the economic signals that were sent from Davos, from the use of tariffs as a negotiating tool to the implications of a transactional approach to global alliances and the debate around energy security versus climate commitments. But first, our business stories this afternoon. In our business stories, Eswatini Railways will construct a railway line from Baga to support and encourage air trade. This was disclosed by Eswatini Railways Chief Executive Officer Mr. Nixon Dlamini during an engagement session hosted by the Eswatini Civil Aviation Authority Eswaka at the Royal Villas Eswatini, aimed at promoting investment in air trade. The Minister for Commerce, Industry and Trade, Honorable Mangoba Khumalo, has applauded the initiative.
Where we are now is we need to then start operationalizing the cargo terminal at the airport. It's extremely important then for us in the Ministry of Commerce, Industry and Trade to be here to talk about how, number one, we mobilize the private sector to use our airport, because they might not be acutely aware of the fact that that is a possibility. And secondly, to encourage Eswaka to invest in cargo terminal infrastructure, because right now it is really minimal investments that they've made. One such project that is currently ongoing is the establishment of a massive cold room warehouse for cargo exports at KM3, and that project is being done by Eswatini Dairy Board. So we are also encouraging the private sector and parastatals to partner with Eswaka to ensure that we develop the cargo terminal, and we also develop the requisite infrastructure to support it. I was happy to hear, for example, Eswatini Railways saying they will be investing in a 9-kilometer rail track that will move now from Baga to the airport, because that will ensure that by road and by rail we can get goods to the airport and out of the airport. That will allow for the cargo terminal at the airport to be utilized a lot more.
Eswatini Civil Aviation Authority's Director General, Dr. Andile Mthethwa, says the aviation sector needs to be supported with the right frameworks, policies and institutions.
It's strategic and foundational in how we position air transport as an engine for trade, as an engine for investment, tourism and economic opportunities in the Kingdom of Eswatini. We are convening this today when aviation globally is no longer viewed merely as a support service, but as a strategic enabler of national growth, of resilience, integration into global value chains.
Different sectors have pledged to enhance efforts to boost the aviation sector's potential in trade.
We as SPE, once we believe in something, we just don't stop until the job is done. That's what I can assure you, for sure.
There is enough money in the world to finance viable projects. Wherever they are, whichever sector of the economy they are, there is enough money. Just as the government has prioritized energy, all the banks in this country are putting money behind energy. Aviation is a very important sector. It needs energy as well. And we're saying as banks, there is no limitation with regards to capital that can be placed in front of viable projects for that sector.
We want to also introduce pre-arrival processing of cargo notifications. So we've already signed an agreement with IATA, enabling us to start off in terms of exchanging electronically the manifest information.
What we have realized as railways is that one thing that has been a problem is imports and exports. Why? Because container traffic, you need the return leg must be a full leg, as well as the inbound leg. It must be a full leg. So that balance needs to happen.
The Eswatini Civil Aviation Authority has stated that 99.99% of the country's trade currently still relies on surface trade. Reporting, Nelson Ndlangamandla, Vuminkosi Nzinisa, Ezulwini.
The Eswatini Investment Promotion Authority, EPA, has announced that it has officially opened applications for businesses with locally manufactured goods to exhibit at the Designed Dictionary Expo 2026, taking place from the 16th to the 19th of April 2026 in Taipei, Taiwan. The authority states that this invitation follows a year of strengthened export development initiatives by EPA in 2025, which included the rollout of the Export Guide, a structured 2026 trade show calendar, enhanced promotion of local traders through storytelling, export readiness training, and trade map training to better prepare local businesses for international markets. The deadline for applications to the Designed Dictionary 2026 is on the 12th of next month. Interested businesses can apply using the link provided by the Eswatini Investment Promotion Authority. Sibusiso Mnisi, Executive Head, Trade Promotion at EPA, says the opportunity comes after a series of deliberate training interventions in export readiness and market intelligence. He states that this platform aligns well with the creative and value-added products produced by Eswatini traders and offers direct access to the Asian market. Local businesses will have the opportunity to survey and interact with buyers from a new market firsthand while promoting their products to prospective customers on the ground. Designed Dictionary is one of Asia's leading trade shows for gifting, stationery, lifestyle products, handcrafts, beauty and wellness, and creative goods, attracting buyers, distributors, and retailers from across the region. Applicants are encouraged to ensure that their products meet international market requirements, that their pricing structures are export-ready, and branding and packaging are enticing and appropriate for an international audience, and that they are ready to engage professionally with buyers and distributors. And that is your business brief this afternoon. After the break, we speak to in-house economist Anele Sibia. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Did you know that there's something like 1.4 billion cars in the world? That's about one car for every 6 people. Cars, not only a way to get around, but also a marvel of engineering. Thousands of parts, crafted in factories all over the world, each designed to interconnect and assemble into a single product. Cars, like this one, are just one example of something made possible by something we call supply chains. These supply chains are the assembly line that creates and delivers the products that you and I, the consumers, want to buy. A vast, interconnected network of production that turns raw materials from all over the world into finished products and delivers them to you. The upside? We get cool stuff like this phone. The downside? If even one of those thousands of pieces is missing or late, well, you don't really have anything, do you? It wasn't always this complicated, though. Back in the day, you'd hammer together some boards, hitch it to a horse, and with a little elbow grease, you had yourself a ride. Until around 100 years ago, something rolled into the scene that changed the game. The first mass-produced automobiles were assembled in the US and could mostly be made from domestic materials. But not everything. Things like the rubber and the metals had to be imported from abroad. And it all had to get to the factory floor in time to be assembled into a car. Over time, cars got more elaborate, luxurious, safe. Engineers added things like microchips, which are complex products themselves, requiring their own production processes. Eventually, we got the supply chain down to a science. People wanted more, and so producers put out more and refined production to get them out quicker and quicker. Suppliers timed things out so that goods would get to the factory just when they were needed. And it wasn't just cars. Even the screen you're watching me on right now was sourced from multiple countries. And then came the pandemic. Ports and borders closed, factory workers were sent home. The whole supply chain was tangled up by things arriving late or not at all. And all this at a time when people were trying to buy more stuff, like cars. When things started reopening, there was a huge backlog, resulting in traffic jams in ports. Car makers didn't have the parts they needed, like this one, because factories making those parts didn't have the people or the materials that they needed. And things still aren't back where they were before, which has led some people to question the effectiveness of the whole global production system and whether the supply chain has just become too complicated. In the face of major shocks, like a pandemic or a war, are supply chains too fragile? And if they are, what can we do about it? Some people have called for reshoring, that is, moving production back home. But research doesn't show that it would improve resilience. It's basically like putting all your eggs in one basket. So, what am I driving at? Well, to get where we're going, we need one another.
Welcome back, and moving on with the program. President Donald Trump has recently made international headlines with his interest in Greenland, the large semi-autonomous island that is part of the Kingdom of Denmark. He had earlier threatened to impose tariffs on European allies if they opposed his plans for America to acquire the island. Now, this sparked sharp criticism from European leaders, NATO officials and global observers who rejected the idea and warned that such actions could damage transatlantic relations. Recently, President Trump announced that he would back off from the tariff threats and claimed that he had agreed on a framework with NATO leaders for future discussions about Greenland and Arctic security. However, Danish officials and allies have made it clear that no agreement exists regarding U.S. control or purchase of Greenland. Now, what are the global implications of the situation, especially for Africa and Eswatini, which is why I'm joined by in-house economist Anile Sibiya, coming to us virtually just to give us the analysis on this entire situation. Mr. Sibiya, thank you so much for your time. I'd like to start off with your interpretation of President Trump's assertion during his remarks or his speech at the World Economic Forum that the United States remains, and I quote, the economic engine of the world. What do you make of that?
Thank you, Notsile, and a good afternoon to you and to the viewer. So yes, America does remain quite pivotal, and what we are seeing happening right now, Notsile, could actually be one of the moves to make sure that America remains a critical and a global economic power engine. Because when you look at recent events, there has been Venezuela, and President Trump has made it clear and without mincing words that American companies are going to be quite heavy in the Venezuelan market. And now we're seeing the race to Greenland. And when you look at it there, it's all about the rare earth minerals, which are quite pertinent in the production of those chips for artificial intelligence. And we do anticipate that in the next decade or so, artificial intelligence is going to be the driver for growth. So President Trump wants to make sure that America remains the growth engine or the leading country in terms of artificial intelligence, which would increase Americans' exports. And I mean, if you look across his deals that he made across, Russia, Ukraine, and that $500 billion mining rights deal. So what we are looking into here right now is President Trump trying to make sure that America remains an economic powerhouse and giving America whatever type of advantage, because the Greenland story is also about the Arctic race. We know that potentially there are rare earth minerals up there in the Arctic, and also quite potentially oil and quite a lot of resources, offshore drilling right there. So I think right now what President Trump is trying to make that quite possible, and we do not know if he is going to alienate America from the rest of the global trading system, or he's going to really succeed in making sure that America leads the AI race. America remains energy sufficient and not dependent on the Middle East, because it's quite an unstable region, and America remains quite the leader and quite sufficient in those rare earth minerals. We know that right now 80% of those rare earth minerals are coming through from China.
In his address, though he was not specific to the African continent, although his remarks do on Greenland rather highlight the renewed importance of strategic territories and resources. What lessons should then the African continent draw from that, given that we do have resources and resource wealth and our strategic location as a continent?
I think as Africa, what we need to do is to ensure that we beneficiate our minerals instead of selling them at that raw level. And with what is happening in Greenland, we might see, African countries rising up. If you look at what is happening there in that Burkina Faso, that Sahel belt with the Ibrahim Traore story there, that's an African awakening where Africa is saying we have the mineral wealth, but can we benefit from it? So Africa does need to invest in beneficiation and the infrastructure and begin to look insular within the continent, and we need to start exploiting the Africa Continental Free Trade Area. We need to start exploiting, other trade arrangements, SADC arrangements, SACO arrangements, the COMESA arrangement, EAC arrangement, ECOWAS arrangements. So there is quite a lot of catching up that Africa needs to do, given these uncertainties and the moving into territories by other nationals, and not just disrupting that sovereignty of those other countries, and just thinking, so we need to have that type of insular look. And also what we need to do is to improve and ramp up intra-African security, because with what is happening right now, if President Trump keeps on pushing, we might see NATO really being fragmented a bit, and that's going to have quite market impact on security within Africa, because we know there's a heavy presence of NATO throughout the whole of Africa just to maintain that peace.
So in wanting to take Greenland or control over Greenland, he said tariffs to the countries that are opposing, and then he decided that he was going to pull back. What are the potential global market implications of using tariffs threats as a negotiation tool? Is this ideal? Was there no better situation to work around it?
In my assessment, President Trump doubling down on his Greenland purchase or Greenland acquisition was largely because we've seen markets crashing a bit in the last couple of weeks. And, he didn't want a repeat of what we saw in April through that movement from, those tariffing the whole globe. So what this is going to do is it does, just force countries to think about restructuring their supply chains and, restructuring trade relations so that we can just be in a position to absorb these turbulent times. We're seeing, the likes of Europe looking at markets into China, looking at other markets and expanding other markets so that the impact of whatever America does is somehow minimized. And we might see a bit of retaliatory tariffs, and we shift back to that situation that we saw in early 2025 at Liberation Day, that 1 April type of movement.
For decisions as such, Mrs. Beer, the U.S. has been labeled a bully or playing global police. To what extent, then, can tariffs still be an effective economic lever without really triggering retaliatory trade wars?
One thing that we've seen about tariffs is the ideal situation for the entire globe to improve efficiency would be a situation where we have non-trade barriers, be they tariff and also non-tariff barriers. Ideally, that would be the best thing that we're looking into. And that is what gives the World Trade Organization its authenticity and, freestanding. So right now, with all this tariffing that we are seeing, we might see the WTO also just being a weakened organization, but it would also just plunge the global economy into another trade war cycle, and that is what we need to try and avoid, because trade wars tend to lead to being a bit of inflationary, and now we are seeing this happening within allies, and we don't think that it's going to be quite an effective move. That is why President Trump has actually just pulled back on that, because the markets were showing that we do not need any uncertainty going forward. We just need to know what we are trading on. An environment where today you are paying a 2% tariff, then tomorrow it goes up to 3%, then the following day it might go by to 2.5%. That's not conducive for business, and business does not like uncertainty. Business requires a calm environment and a predictable environment so that we can plan long term and also plan our supply chains and other routes.
While addressing, the global community gave the assurance that there would be a framework for a future deal on Greenland. Though pulling back now, then one makes you wonder, to some extent, he still wants Greenland, but just in a different approach. How economically viable is Greenland really to the U.S.?
So Greenland is quite economically viable, because when you look at the number of rare earth minerals that are there, and that's what we think that is what President Trump is going for. And it is closer to the Arctic. That is one of Earth's unexplored frontiers, and if you can get there, the possibility of the mineral wealth and the possibility of quite a lot of the strategic location, the possibility of another oil well, the possibility. And what he's saying right now is he wants to ramp up American security by enacting what he calls an iron, it's not an iron dome, but some golden dome, where we is going to have this missile detection capabilities from space. And the Arctic is quite valuable for that in terms of American security. And that is the angle that he is pushing, because once you start screaming security, you expect Europe and the entire NATO to then say, no, we need to move ahead with this.
This morning, we saw the signing of the Trump's Board of Peace Charter. Perhaps you could just weigh in on that, this move against, the backdrop of President Trump's World Economic Forum remarks on Greenland, tariffs, and national interest. Do you think this new board, this Board of Peace, will actually make any difference when we're looking at how global economic events have panned out?
That depends on the outcomes of the midterms in the US, because that is what is going to determine how much power does President Trump have, going forward. And when you look at, the possibility that the Republicans may actually lose Congress or lose Senate right now, and that makes it a tad bit difficult for President Trump to surge forward in any type of accord. And we think it's just going to break down, and things are going to revert to some sort of normalcy because, come November, he might just be a sitting duck, a president who can't really make any decisions all the way through to the end of his term in 2029.
All right, Mr. Spear, thank you so much for your input on that. While we'll still have you with us, care to fill us in on what's shaping markets today? I take it that the Greenland story is, of course, topping the list.
Yeah, and mostly not it is the Greenland story. Because we're seeing a bit of rebound in markets, and it's somehow a reaction to that story where we just hoping that there is going to be a framework, and we are hoping that relations will be restored. So we're seeing a lot of happiness across the markets with the US, the Dow Jones Industrial Average hitting that 49,000 mark, really would edge up to that 50,000 mark if we would see some framework. And that is given the fact that we are seeing earnings coming in strong. And we are also seeing a bit of stability in terms of the macroeconomics, but there are still those issues to do with the Federal Reserve Bank. And, the tech-heavy Nasdaq Composite Index gained some 275 points in trade, just climbing back to that 23,000 mark. And we do hope that as, that rare earth mineral quagmire is solved, you will see that the Dow Jones, going back to those 24,000 levels. The Standard & Poor's index there, just moving up to 6,875 in overall all share volumes. Again, because the Greenland story brings about uncertainty, and also in terms of consumption and the disruption in supply chains, there we're seeing the Nasdaq, just shifting back up, but we will see it struggling to get back to that 7,000 mark until and unless the Greenland story is being resolved. Coming into Europe, the FTSE 100 there gained some 65 points, also in terms of reaction to those news, but there are those inflation fears. We've seen UK inflation heading up to 3.5% in this quarter, and that just brings it out in terms of what the Bank of England is going to do in their next monetary policy. And then the DAX and the CAC 40 there just climbing up a bit. The DAX has climbed up some 300 points on the backdrop of those news. And then the CAC 40, which is laden with the luxury goods type of listings. And, those are benefiting from what we are seeing happening across in the global north. And then in terms of the Asian stocks, the Nikkei 100 there has gained some 914 points, not just reacting to those news coming through from Davos, and also, just the markets are shining the sell Japan type of notion that we've been seeing in the last couple of weeks, and just enjoying this positive news that just came in. And then the Hang Seng and the Shanghai Composite Index also on an uptick, with the Shanghai Composite Index gaining some 5.64 points, in reaction to those news. But still, there are worries within China in terms of the growth prospects and whether we're going to see a stimulus anytime soon. Johannesburg Stock Exchange has gained some 725 points in today's trade, and that's largely driven by the fact that gold keeps on hitting all-time highs, and we've seen the impacts of that on the dollar rand exchange rate today, hitting its all-time lows of 16.22. I mean, 10-year lows of 16.22. The Eswatini Stock Exchange remains flat at 491.45 in terms of the all shares index. Gold has just lost a bit in terms of the price per barrel, just losing some 7.3 points, coming to sit at 4,830 in today's trade per ounce. And oil just lost a bit in terms of its outlook to 64.46 per barrel, largely driven by the fact that we're seeing some uncertainties settling, in the Greenland story, in Iran, and also in Venezuela. In terms of the currency markets, we are sitting at 16.22 per dollar. We've seen the Lilangeni hitting some 16.20, largely buoyed by the gold price and the macroeconomic stability within South Africa, and that, those inflation targeting and the structural adjustments that we are seeing. We're seeing a bit of weakness against the euro, and we're seeing a bit of strength against the Japanese yen. Thank you, Notsile.
Thank you very much, Mr. Sibia, for your insights. That was in-house economist Sanele Sibia helping us make sense of U.S. President Donald Trump's address to the World Economic Forum and also all that is shaping markets today. Otherwise, this has been Market View ERS Text Talk. Thank you very much for joining us. Until the next edition, take care.